Hi, this is Mark McRae from Surefire Trading, and thanks for joining me. In this lesson, I want to go over where you can find some great trading opportunities. What I find is that traders, as they gain experience, tend to forget about some of the basics. They get so wrapped up in their various indicators that they sort of lose sight of where the great opportunities are. And some of the best opportunities are in and around support and resistance. In previous lessons, we covered trading zones. Now, a zone is simply an area of support and resistance. It's not an exact number. Now, here, for example, you can see that at the bottom of this bar here, I've drawn a line. Now, I'll switch to a line chart, and I simply draw another line along the closes. This gives me a zone. So, anytime the market approaches this area of inside this zone, I pay particular attention. And let me just swap back to a bar chart. And here, if we were to draw a zone here, just so you get the hang of it, this would be resistance at this point here. We'll switch to a line chart, and I'll grab another one of these. So this becomes a zone. If the market comes back up, I'm interested when the market gets to this level here. Now, lately, over the last few months, the market's actually been fantastic to trade, lots of volatility, and that's what you need as a trader. And here's a daily chart of the British pound, and here you can see that the market made its way down, found support, came back up, and formed resistance here. This is where I drew this line here. Came back down, formed a double bottom, and here you should have been interested. You know, the market has found support twice in the same area. Market comes up, comes back down for a third time to test this area here. So this whole area has been tested 3 times. Now here you can see an expansion bar. It's a very large bar, and look at the extremes from the open to the close. This tells me the market is rejecting this area of support. Now, it doesn't matter what indicator you use for a trigger to get you into a trade, whether it's MACD or ADX or whatever it is, the signal is much stronger if it occurs around support and resistance. It's confirmation that we broke, or the market was moving back up. You can see we broke the neckline here and headed towards zone number 2, which I've marked here. Now, as it happens, I've been particularly active in the British pound over the last month or so, and I'm very familiar with these. This here is the 27th. Now, if we go down to a lower time frame to look for a trading opportunity, and let's go down to a 1-hour chart. This is actually the breakout in the 6th of March. You can see these 2 lines are the zone number 2, which I've marked in the daily chart. So here is the 27th. Now, here is the stochastic. It's a setting of 533, and I have divergence. Now, this is bearish divergence, and divergence simply means that your indicator is doing something different from the market. Here you have a peak, and here you have a lower peak, whilst the market is making a higher peak. So we have divergence. This tells me there's a setup, there's a potential for a trade. It's also around resistance, so the probability of success is much higher. On the 28th, you can see we have divergence again. The market's making its way down as the stochastic is making its way up. Another great opportunity to trade. Again, it doesn't matter what your favorite indicator is, it's just a lot more reliable when it happens in and around support and resistance. So I highly recommend that you mark support and resistance zones in a higher time frame, preferably 4 times the time frame that you're trading, but at least on a daily chart. Have a look at the daily chart and a weekly chart and mark those zones, because they are fantastic trading opportunities. That's it for now. Thanks for joining me.